Hey traders, Raghee here. Happy New Year. Good to see you all for our first episode of Charts and Coffee for 2021. All right, so let's get to it. Very excited about the new year and all the opportunities that await us. I know that there's going to be a lot of interesting things happening in terms of how the Federal Reserve will continue to keep this stock market going, growing balance sheet, low rates. We're already seeing a reflation trade in play. So there's a lot of neat things I think that we're going to continue to see just overlap right into the new year. However, one of the things that we've been talking about, and that has to take us back to certain types of seasonal tendencies. Where is my... So I was going to look at the seasonal tendencies in terms of what we would typically see this year. Let's see, where is that? I have my almanac here somewhere. There we go. Okay. All right. So as we go into the new year, and I think my almanac is coming today. So I don't know how many of you ordered the 2021. I ordered 2 copies of it, and one for me and one for my partner here in the office. And so on Thursday, one of the things that we know is that the Dow is typically down. The NASDAQ is typically down 15 out of 19 of the last 19 years. Now, here's the thing I want to caution everybody. I'll refer to the almanac, I think, throughout the year, but I want you guys to remember, and this is going to go with the seasonals that I'm going to point out. Remember, seasonals and tendencies and any kind of these types of things that happen 15 out of 19 years or 10 out of the last 12, those things. Remember this, please. You want these to overlap what the markets are doing now. In other words, when you're looking at market tendencies, remember that these are just tendencies, and when they overlap with the structure, the price structure, the volume structure of the market currently, then you've really got something, okay? So keep that in mind. I'm going to talk about tendencies, and that's kind of why I'm putting this sort of disclaimer out there, because there is, going into the window between the 9th and the 17th of this month, there's that unwind that we see. Last week in the episodes, and also in the free videos that I do for Simpler Futures, where I hang my hat, talk about my futures trading, and do some day trading in that room as well. One of the things that I was reminding our members is that the dark side of the Santa rally, and the dark side of the Santa rally isn't just the move higher in equities in this window dressing, right? It's really window dressing. We call it the Santa rally because it sounds so much nicer, doesn't it? But the dark side of the Santa rally is what positions are unwound. What are those positions that don't look as good Q3, Q4 that a portfolio manager may just want off their books? And that's the dark side of the Santa rally. Well, it extends into the new year, middle to latter half of January, where a lot of those window dressing positions will be unwound, okay? Because they've done their job. They can be claimed on the books for 2020. And then if they're not positions that make sense at the highs that they're bought at, remember, a lot of these markets are bought at these significant highs. If they're not justifiable to hold, they're going to get dumped. And a lot of you probably anecdotally have noticed that mid-January can get pretty ugly. And you wonder, well, why is this? Why do we wake up in such a bad mood? What's this 2-week delayed hangover that we see? Well, it's the window undressing. Okay, so I just wanted to spend a few minutes talking about that. And let's go ahead and tackle some questions here and go to our charts. And let me just enlarge our charts up a little bit. There we go. All right. So yes, happy Monday. Happy New Year. Great to see you all. And yeah, I'm looking forward to Charts and Coffee going into 2021. All right. So gold, question about gold. So whenever I talk about gold, especially in the futures room, I'll always start with the underlying futures contract. In other words, the February contract of GC. And then I'll take a look at GLD. And yes, one of the things that I've been mentioning throughout the year, well, let me get my drawing tool here. Throughout this little bit of time here, that we were weakening right in there, I still have emphasized that I want to be long gold. And I definitely want to be long gold throughout this year, going into 2021. By the way, as long as we're talking about GLD, add SLV to that list as well. Both of these are looking very good for me. And then on the flip side of that, I want to continue to be short the US dollar. All right. So yeah, I definitely like the long gold position. I will continue to make it a longer term position. And here's the thing. If I want to trade gold, I'll trade the micro GC. I'll trade the GC futures contracts. If I want to sort of buy and hold and have a longer term commitment to gold, I'll usually go with options, further dated out options, or I'll just buy GLD. Now, relatedly, I have zero interest in the miners. Okay, gang, just none in terms of the miners, but I love the long position in gold. All right, moving on. Let's go into, the farmers. Now, actually, this is the Stock Traders Almanac. Yeah, the Stock Traders Almanac is what this is. I'm a big fan of season. I'm a big fan of these tendencies, because if the tendencies can override with lap, right, with price, you've really got something pretty special. It's on back order. Oh, wow. I know that my copies are coming today and tomorrow, but wow, it's on back order already. Huh, interesting. All right. So Pablo says, Happy New Year. Thank you, Pablo. I appreciate that. MP, sure. All right. Nice double green uptrend. I would say focus on the 21 EMA, my friend. I would have no problem with looking at the 21 EMA for a potential long position. Yeah, I do like that for sure. What time do I stream in the gold room? Okay. So I'll be in the simpler futures room, talking about some end of day, your gold, your silvers, your crudes, three markets I'm very interested in, and currencies, by the way, currencies. I'm talking about currencies, both in the simpler futures room and in the sector secrets mastery, because futures become an interesting conversation. We have currency ETFs that we can play. But by the way, my friend, 21 EMA. So one of the things that I've been focusing on is how do I want to play the strength in currencies against the dollar, Australian dollar, Canadian dollar, euro, pound, and then sometimes even the accompanying country ETFs. And this is where there are ETFs, the currencies, and there are ETFs, the countries, that are very, very useful for us. It's just that the liquidity on the options chain on these can be a little tricky. So you've got to be very specific about the strike. You got to be very specific about the expiry that you're going to trade. But I'll be in the futures room from 3 to 4 for the close, talking about a lot of these end of day setups, which is what I like to do on a Monday, longer term watch list. And I'll be in the options room from 1:30 to 2. 1:30 to 2. So I'll be in the options room for just 2 more weeks this year. And then after that, it'll only be very sporadically. I'll be spending all my time in the sector secrets mastery room and the futures room, and I won't be in the options room anymore. All right. So markets will drop, let's see, this Thursday or Thursday in general. Gracie, I'm actually looking, I'm not looking any specific Thursday. I'm saying that let's bring up the calendar here. Between the 9th, so let's call it this, the 11th and the 18th, basically the 3rd and 4th week of this month, I'm concerned that there may be some weakness, a little bit of a pullback of the trend that we're seeing, the uptrend in the S&P, Dow, and NASDAQ. And then, of course, of the coordinating sectors, which, by the way, for those of you that see the double green, those of you that see how strong the market has been, the cool thing about what's happening right now is that we're waiting for a lot of us that are trend followers that love a pullback. We're waiting for that pullback right now. And if that's the way it's going to come in this window undressing, then bring it. Just bring it. That's exactly what we want to take advantage of. All right. So next up is when I talk about, hey there, Beverly. When I talk about unwinding what I consider tech, I'm talking about broadly. Broadly, I think that the unwind will probably come a little bit more punctuated in the markets that benefited the most into the rally into the end of the year. But financials, this is what financials look like. Would I love to see a pullback here? Absolutely. Again, not today, not even this week. What about, you mentioned tech? Well, tech, remember, tech comes in really three flavors now, right? We can look at tech by way of the NASDAQ futures or the QQQ. But if you want to get a little bit more granular about the way in which tech is going to move, we've got XLK, which is your Apple Microsoft narrative. We've got XLC, which is your Facebook Alphabet narrative. And then finally, we have XLY, which is Amazon, right? So K, C, Y, or just all of them in the QQQ. So I would get a little bit more granular to, who is choppy. I haven't been interested in Facebook at all to the long or short side. It's chop. Flip a coin. Just flip a coin. I got to find my Wall Street coin. I have this cool little coin issued by, I forgot what country, but it's got the Wall Street Bulls and Bears and everything on there. Anyways, flip a coin in a yellow sideways market, which is what this is. And there's no edge here, gang. There's no edge in this. I would absolutely avoid Facebook. I'd be cautious with Google. I'd be cautious, although quite optimistic to the upside in Microsoft because the structure by way of the propulsion dots are coming on. Apple, completely different conversation. So start with the structure, the underlying structure of the market. And thank you very much for the question. Beverly, Michael asks, Bitcoin? I have no comment whatsoever on what Bitcoin's done the last 90 days, because the last 90 days is the bandwagon trade. The last 90 days is the FOMO trade. The last 90 days, or even Bitcoin's very, very quick ascent is less about understanding Bitcoin. The people who are getting in now, and I know this is going to sound kind of, I don't know, it might be off-putting, but I'm just going to say it. People who are getting into it now don't get it. And that's okay. I'm not saying the people who are fans of it, good for them, they're right. But the people who are rushing into Bitcoin now do not understand Bitcoin. And this is why I say that. If they understood Bitcoin, if they understood blockchain, if they understood the narrative that's being discussed up in here, right? Or even through all of this, if they understood that, they'd be buyers. And as they say, hodlers in here. Right? They would have said, oh gosh, 8,000, 4,000, and going back even further. Right? Going back even further. So I think that when you talk about Bitcoin, I'm not talking, there is a disruptive technology here. That word disruptive technology, we're going to hear ad nauseum, and this is not her fault. But we're going to hear this disruptive technology and disruptive platforms ad nauseum because Cathie Wood and ARK just slayed the markets last year with an actively traded ETF, high concentration weighting, big bets on names that people thought that would never see remember her projections on Tesla, pre-split Tesla was 4,000, which when you think about where Tesla's sitting right now before the 5-for-1, it's pretty accurate. So why do I bring up that? Because either you're and I don't mean you at all, Michael. I mean all of us, right? Either you get and you understand Bitcoin back when it was 8,000, not 18, not 28, certainly not if it goes to 38. So I have nothing to say about this other than play it like a market that's gone parabolic. Please be prudent and wait for pullbacks. And this market's full on gone parabolic. So moves like today are absolutely to be expected. These are going to be moves to be expected because of the way in which suddenly the FOMO has kicked in. This is full on FOMO, right? Oh my gosh. So that's what I feel about Bitcoin. It's not to be discussed at 18 and 28,000. It's, well, if you liked it at 8, it makes sense at 18 and 28. You'll probably keep holding it. So I hope that makes sense. Bitcoin is digital currency. It's digital Forex. And Bitcoin itself, not any of the other coins, Bitcoin itself is sort of the reserve currency of the crypto. And I'm a huge fan of crypto. On that bookshelf behind me, I have I'd say about 6 different books on crypto that I've been reading over, since about late 2015, but 2016. So you might say, well, Rog, okay, fair enough. But when did you get it? Gang, I didn't get it until 2016. Yeah, Bitcoin resonated with me right before the election in 2016, based upon my cousin in India talking about the confiscation of rupees and how they were buying Bitcoins. And so you saw I had always on the offense. In other words, once you get it, like I did in 2016, I had always on the offense, meaning buy it. If you understand and believe it, buy it, but not now. So yeah, that's, and I appreciate the question. Thank you. All right, let's see. I am not interested in any of the other coins. Thank you for asking. No, I'm interested in the reserve currency. I've never had a significant holding in anything else. Yeah, I have not. And there's Bitcoin futures, which is pretty cool, but I usually play the underlying. And, this to me is very much the way in which I'm talking about the dollar this year, Euro US dollar, Bitcoin US dollar. I think Forex traders started to get crypto a little earlier than stock and futures traders because we're already dealing with currencies. So I'm very grateful for having been in the currency markets since, hang on one second here, gang. I've been that's my futures room. Just wake it up. All right, excellent. Got Neil on the mic in there. So anyway, I've been very grateful that I've been playing currencies for as long as I have, where Bitcoin made a lot of sense. Justin, I'm not as enthused about the Loonie as I am probably the other two COM dolls, the Aussie and the Kiwi. I'm not as excited about those. Although this downtrend, you might say, oh my gosh, look at the Canadian dollar. No, this is actually the US dollar sinking against the Canadian dollar. If you're ever confused about pairs trading, gang, and currencies are the biggest market in the world, don't let them scare you. All right. This is US dollar versus Canadian dollar. This is the first currency. This is the second currency. The direction of the chart actually reflects the first currency. This is US dollar weakness. This is Canadian dollar strength. That's the way this works. So yes, I definitely can see the appeal of the Canadian dollar. It's probably, for me, behind Aussie and Kiwi, but I definitely don't want to short it. So yes, Justin, I like it. I just want to make sure that it's not the only commodity dollar that you're focused on. But yeah, absolutely. I think let's say the only two that I'm not interested in, Justin, in buying is the yen and the Swiss franc. The yen and the Swiss franc. Okay. All right. Next up. Oh, by the way, gang, oh my gosh, how can I forget as we sort of wrap up our session? This Wednesday, if you haven't already checked it out, at simplertrading.com/hour. If some of these questions, and I saw a couple questions about double greens and how do you interpret that and the moving averages and et cetera, this, there we go. This Wednesday, day after tomorrow, can't believe it's already here. Day after tomorrow, I'm going to be doing a webinar. And this webinar is going to be covering ETFs, country ETFs and currency ETFs, like I alluded to, would be part of what I would apply this approach to. But I'm going to be doing this on this Wednesday, first big webinar of the year, 8 p.m. Eastern, gang. I'm on the East Coast, so 8 p.m. Eastern. Just register now. Even if you can't attend live, we'll send you the replay as well. But, attend live because I do take questions. But we'll send you the replay as well if you register. Anyway, yeah, super excited about that. Yeah. Does Ethereum have a very big... I'm not questioning Ethereum's place in the blockchain. It's just that I've gone in on Bitcoin. Yeah, not that that's just my way of looking at it. Yeah. And thank you very much. I appreciate that. I appreciate that, Grace Vision. Let's see here. Wouldn't miss if I appreciate that. Me neither. I got to be there. I'm looking forward to it. How often do I post video updates? I post video updates about every 7 to 10 days, but I'm in the room almost every day. We have trading ideas going out multiple times per week. So it's a very active community, my friend. Yeah. And it's kind of, we're officially launching it as of Wednesday, for those of you that are wondering. Yeah, it's going official this Wednesday, although we've been doing it for a couple months now. All right, last question. Let's take a look at the chart before we wrap it up. And thank you as always for joining me for these episodes of Charts and Coffee. Do I like Visa? Absolutely. But we have to pull back. We have to pull back because double green. I like Visa better than MasterCard, by the way. Another thing you could do is take a look at those ETFs, which have Visa heavily weighted within it. So, Patricia, yeah, I like Visa a lot. I just need to pull back. And by the way, if the market goes sideways again, look for a zone like this to get long as well. So you've got a pretty good zone that you could look for buys within. But I'm with you. I do like this stock, and I would also look at the ETFs that have this stock heavily weighted within it. All right. Okay. So gang, thank you as always. Have a great one. I will see you all in the options and the futures room and the sector secrets mastery later on today. And I'll also see you guys tomorrow morning at 9 a.m. for our daily charts and coffee show. Gang, thanks for your time. Be good to each other.